It's tax season with the deadline to file your federal taxes just days away. So here to help us answer the last-minute tax questions we may have is a Southern California IRS spokesperson, Raphael Tulino. Welcome.
Hi, thanks for having me.
So this is the first tax season since the new tax reform plan has been rolled out. What are the biggest changes?
Oh, so many. Fundamentally, we saw taxes change. The 1040 form has changed. There's 6 new schedules. The 1040A and EZ, familiar forms to a lot of people, they've been eliminated. But as to what's provisions themselves, individuals and businesses, the standard deductions have been nearly doubled. Personal exemptions have been suspended, if you will, or eliminated, at least until Congress addresses them, because this law is in place at least until 2025. You're talking about modified deductions and credits all over the place, really. Tax rates reduced a little bit. Business changes as well. I mean, so many provisions, individual and businesses, that are affecting everybody in some way, shape, or form on your return, that you're going to see some kind of difference versus previous years.
And there's been a lot of talk about the changes to charitable donations. Can you explain what change was made there?
Well, on a schedule, look, if you want to take a charitable contribution and see a tax benefit on a tax return, you have to be itemizing on a Schedule A, because that's where it goes. But if the standard deduction's been doubled and you take the standard instead of the itemized, then really you're not going to find a tax benefit, because you want to take the greater of your itemized and your standard deduction that you get for filing and your filing status. And what's happening is, because the standard's been doubled so much, increased so much, and almost doubled, a lot of folks, when they make those charitable contributions, they're not really seeing the benefit, but in essence maybe they are, because the standard's been doubled. In other words, that's where it goes. On a Schedule A is where you see your charitable. So I've read some stories where a lot of folks, in light of this law, might be bunching. Maybe you itemize next year. Maybe you take a year and take all those contributions and do it in another year. But we'll see how the effect goes going forward with the new law based on the standard and some of the changes on the Schedule A.
And for personal taxes, who should be itemizing?
Well, no matter who you are, you get a filing status, right? You take the bigger number. So I should be itemizing if my number, if I'm married filing joint, it's $24,000 married filing joint in terms of the standard deduction, right? I'm itemizing theoretically if it's $1 more on my Schedule A. Schedule A includes property taxes, mortgage, that kind of thing, medical, dental, the charitable contributions, that kind of thing. All those add up to more than the standard. I'm taking the standard because I want to reduce the taxes I pay as much as I can.
So some people think that if you itemize, you increase your chances of being audited. Is that true?
No. It's the information on the return itself, not necessarily if you itemize or not, or choose a different schedule or not. The information on the return is honest and accurate, no matter what's on there. If it's a reflection of you based on your situation, you should be fine.
The deadline is just days away, Monday. So who should file for an extension?
Anybody who anybody who can't get it together, so to speak. So we don't take a stance and say you should file at this time. We basically say file when you're ready. If you can't get it done, you don't want to file an inaccurate return out of haste. So take your time, take the extra 6 months if you need it. It's easy to request it, it's automatic. Here's the thing about it though, it's an extension of time to file and not to pay. So if you owe or you think you owe, then the deadline is still this Monday. That way you avoid any penalties and interest that can accrue on your account. And if you have a requirement to file and you can't full pay, let's work something out, file a return, pay something, work it out going forward, because the penalty for having a requirement to file and not filing is much greater than filing and not full paying.
And we live in sunny San Diego, which is known for being expensive. A lot of people may take on a second job or have a side gig.
Yeah.
What should people know if they're freelancing or doing these side gigs as far as when it comes to filing their federal taxes?
Yeah, good call, because a lot of folks should make quarterly estimated tax payments if you are a gig economy or a shared economy worker, get 1099, independent contractor. Okay, so basically taxes are pay as you go. That's why when you're a salaried employee, you have money withheld, right? And most of us are, that's why we get a refund. Different story, right? But if you're not making, you don't have that going in to the government automatically, you should be paying those taxes 4 times a year with quarterly estimated tax payments. And those are easy to do. You can do electronically, but good idea to keep current, because what happens is you get to file the return and you realize, oh boy, I got a big balance due. I didn't take care of business throughout the whole year. I'm under withheld. There's a penalty for that, although there is some relief available based on the new law. But the bottom line is you should stay current. Quarterly estimated tax payments are the way to go.
Raphael Tulino, thank you so much.
Thanks for having me.